KTOS at 104.04 with that 13.78% rocket is not a stock. It is a small military coup on your watch list. And this is Dayrade Daily, where we weaponize these moves into intraday plans before they weaponize your account. So smash like and subscribe before KTOS drafts your risk management into service.
KTOS feels illegal today. Every candle looks like it skipped the tutorial. And we are here speedrunning entries for day traders who woke up late and still want stonks and chaos before lunch.
Relax, throttle hamsters. KTOS is ripping because defense spending headlines plus contract rumors lit a fuse, and we will walk through where you trade it and where you let someone else donate first.
And it is not just KTOS, BE VG GAP FIGR. The whole industrials and energy cluster is acting like Friday, January 09, 2026 is some secret options expiration. So we will map intraday levels, not fairy tales.
Exactly. My people, today is Moonshot Industrials Day. We have BE sprinting 12.81%, VG swinging 10.26%, GAP retail glow up, and FIGR tossing 6.78% like tip money. And if you ignore the like button, your field slipped by exactly that much, scientifically.
Wait, BE up 12.81% is wild. Bloom Energy woke up and chose Solar Punk Revenge, and every breakout scalper in chat is mashing by like it is a boss fight with no respawns.
BE is running because fuel cell headlines plus policy chatter finally aligned. But listen, degenerates. Intraday, that is a textbook gap and drive name. You stalk the first real pullback, not the middle of the parabolic flamethrower.
Exactly. You let the early martyrs buy the top wick, then you step in like a disciplined villain at the first higher low that actually looks buyable, not like a dare from your worst impulses.
Concretely, with B, I want opening range to establish, then either an opening drive continuation with higher lows along volume-weighted levels, or a mean reversion fade if it loses that structure, not hero shorts into the first spike because you are bored.
Translation from Orin Speak. If your heart rate hits earning surprise on every tick, you size like an idiot. Reduce size until you can breathe in complete sentences.
Jet just accidentally gave a risk tip. Write that down, people. If your breathing pattern matches 1-minute candles, you are not a trader. You are a warning label.
Speaking of warning labels, VG at 7.52, up 10.26%. Is that penny adjacent lava pool volume spike fuel? Plus maybe some mean crowd playing environmental savior while secretly scalping 2-cent pops?
VG tape is pure chaos. Every micro dip is getting punched by some hero with zero chill. This is Scalp City, not retirement account material.
Also, with VG spreads can randomly widen, so you plan tiny size and very clear exits. Or that 10.26% move becomes your 10.26% lessons learned donation.
Exactly, kid. Names like VG are where people learn that slippage is not a myth. If your first fill feels like betrayal, that was your order sizing, not the market makers stealing grandma.
Meanwhile, Gap is quietly throwing a 6.8% fashion show at 28.42, and nobody told me. Retail squeeze plus decent holiday comps plus short covering equals discount mall renaissance.
Gap ripping 6.8% is insane. My brain still thinks of it as small background noise. Now it is trading like a limited edition streetwear drop you had to camp outside for.
Gap is moving because results did not implode and shorts were leaning. Classic retail mispricing unwind. For us, that means trend style intraday, but with brutal fake breaks near prior resistance zones.
With gap, I really like an opening range reclaim strategy. If it pokes above opening high, fails, then later retakes with cleaner order flow. That second chance can be a defined risk long rather than emotional chasing.
See, this is why we keep on around. My people. He says, reclaim strategy. I hear, dare to enter when the weak hands tap out. Just remember, your stop, not your ego.
Ego is why my landlord knows OXY ticker by heart. Speaking of OXY, up 5.46% at 43.23 is oil cosplay for adrenaline addicts.
OXY is catching love because crude is bouncing, and energy rotation is back in fashion. But intraday it is more grind than moon. Think trend scalp along volume-weighted support, not lottery ticket.
If you insist on trading OXY today, track how it behaves around prior session highs. If it repeatedly rejects that zone with heavier selling, that is not you being cursed. That is just a clean fade setup.
Also, if you fade OXY and it rips straight through you, that is the market telling you to like the video for emotional support and maybe consider trading something that is not correlated with your gas bill.
Speaking of emotional support, HAL at 32.17, up 5.89%, is services sector, saying, remember me? It trades like a caffeinated cousin of OXY.
HAL moves when rig activity and capex chatter perk up. But intraday you are basically surfing sector beta. Fine for trend scalps, terrible for YOLO options fantasies.
Quick tip framed as therapy. If you are red on OXY HAL and VG at the same time, you are not diversified. You are just collecting correlated pain in different costumes.
Exactly. Diversification is not buying every ticker that moves 5.00% today, my people. That is just speed running a lesson on why average volatility at 6.75% will chew you up if you chase everything.
Wait, average volatility 6.75% explains my whole week. This tape is a trampoline, and I showed up with ankle weights and no plan.
And yet somehow you still live. Pro tip, kids. When overall sentiment is bullish like today, you do better stalking pullbacks on leaders than revenge shorting every green candle that insults your worldview.
Leaders today definitely include KTOS and BE. Both are gap and go candidates, but structure matters. Buying clean higher lows or opening range breakout retests beats panic chasing the initial spike.
KTOS is not just a leader. It is practically a religion today. 13.78% on defense, plus social chatter. My cult is ready to draw trend lines shaped like missiles.
Bro, the KTOS call volume in chat is insane. It looks like a Reddit altar. People are confessing sins like, I sold at 3% help.
Extreme social sentiment is cute until halts start. Reddit loves names like KTOS because war plus profits feels edgy. You love them because liquidity lets you in and out before your coffee cools.
Sorry, quick nerd note. KTOS has both narrative and actual contract flow behind it, so be careful treating it like a pure meme short squeeze. It can trend longer than your patience.
Exactly. Which is why for KTOS today, I want you either taking the opening drive with a tight leash or waiting for that first nasty dip that still holds prior breakout levels and riding the rebirth, not the eulogy.
Can we talk FIGR at 58.4, up 6.78%? Financials suddenly acting like meme stocks stresses me out.
FIGR is juiced because rate cut odds plus better credit metrics have the suits high-fiving. For us, it is clean momentum on strong tape. But liquidity traps happen if you chase breakouts into lunchtime air.
I actually like FIGR for an opening range breakout, then hold as long as it respects that base. The second it knifes through that level on real selling, your job is exit, not debate its valuation.
Yes, no hostage negotiations with figure, my people. Set the stop before entry, or you will start drawing Fibonacci levels on your coping mechanisms instead of the chart. And also, tap subscribe before your discipline stops out.